right, weekly technicals. We're back. You had a good week last week on all of those calls. How many out of, I think it was 6 pairs?
There's too many pairs. Yeah, I think so. Around 6 pairs. And we had no losses pretty much.
Yeah, so you were correct on BTC, you were right on ETH, US 30, S&P didn't reach our area of interest, so no trades taken. GU done, GJ good. Gold also didn't reach our area of interest. I think gold actually is probably going to hold out till the next Fed meeting. There seems to be a lot going on that perspective, but the market seemed to be pumping. Like, this has to be a short squeeze. There's no other reason for it.
All right, so shall we begin with the fundamentals?
Yeah, let's go fundamentals, and then
let me share my screen.
oh.
All right, let's look at the previous week before we look at this one. Previous week, we had a lot of fundamentals with I think all currencies, they had a lot of heavy fundamentals last week. So let's look at from Tuesday. We had the claimant count change. I think this is with the unemployment related benefits. And behold, again, the unemployment benefits numbers came in way higher than the previous month, again showing that the UK economy is still not doing well. They're still suffering. That's not surprising. And what do we see here as well? The average earnings index is still a little bit higher from the previous month, right? Let's look at the previous. Yep. See, if you look at the number, it's been going up every single month, which means they still have not got inflation under control, because this number should be going down, right? So I think there's a lot more of pain coming to the UK economy. They have to hike interest rates. So this doesn't look good for UK. I think we'll have a very deep recession when it comes to the UK and even the Eurozone. Yeah. Empire State Manufacturing Index. This is the manufacturing index from New York, right? Empire State. And this number came in way low, really low. This means that at least from the US side of the economy, the economy is actually slowing down. If you look at the number, the forecasted number, and if you compare to the actual number, that's a big difference, right? Because some similar number came out on August of last year, right? So this is showing that maybe there is a heavy slowdown in the economy. Maybe the rate hikes are working, right? So on Wednesday, we had heavy Bank of Japan news. Again, Bank of Japan decided not to change the policies. Again, they're maintaining the negative interest rates. And I think so. They also are buying unlimited bonds, right? So they still remain in quantitative easing policy, and they also mentioned that if required, they will even supplement that QE with even more QE policies, like more bond buying, maybe reducing the interest rates further. Because JPY, the Japan economy, this is a good example of the over deflation. So they over deflated their economy. So they have to now inflate it because they have no choice but to inflate it, right? So JPY is looking bleak as well. They have to inflate their economy. And then we have the CPI. British pound CPI came in at 10.5, little bit lower, right, from the previous month, which was 10.7. And if you notice all the numbers from all the way from August, it's been in double digits. So nothing to celebrate here. Yeah, we're still in eye-watering high levels. And especially the RPI. RPI is what the consumers actually look at. It's the change of price of goods and services purchased by consumers. So this number came in at 13.4%. So the actual inflation the consumers are facing is at 13.4%. It's very high, very, very high, eye-watering high. So unfortunately, inflation again is not under control in the UK, and they will have a lot of interest rate hikes coming soon, I believe. And then we have the dollar. This is the PPI, not CPI. The CPI is consumer, P is producer. So producer price index, inflation. So if you notice the numbers, these numbers have come in a little bit lower from the previous month, the core PPI, right? So we are seeing a slowdown of the economy in US. The actual PPI again slowdown, and the core retail sales also an important number. If you notice the number, it's coming lower. That means there are few consumers are not buying as much, so the sales are lower. So we are seeing a slowdown in the economy with US dollar at this moment. Yeah.
On that side of things, obviously
Yeah.
it's January now, the period of November and December is a holiday season. So
Exactly. Yep.
that's enough justification for, I would say, consumer spending or retail sales coming down.
Yep.
One more thought I was having when you were going over the UK CPI, is there any difference in the weightage of the goods and services in the basket compared to the US CPI?
Yeah, definitely there should be. Let's look at it. UK
Because that'd be an
CPI.
interesting one to look at. And just pull up a US CPI basket.
UK.
Last week
UK
we
one.
went over the US weightage and everything was going up except for fuel, but the fuel carried a significant weightage in that basket, hence why they were able to call that inflation's coming down. And it's crazy, like markets have reacted to that just based on a sole headline without digesting what it actually means.
So this is the UK one. This is the weightage. These are so the heaviest weightage with UK goes into housing and household services, right? When it comes, if you compare it to the US, I think it comes in the transport section. It's way low. It's 11.1.
Yeah, so that's where the biggest difference is that in the US puts fuel within that transport sector.
Exactly. That's
It's
why.
pure manipulation from the US. That's all it is.
Yep, exactly. Because if you look at the PPI as well, the producer price index, which came in lower, again, that's because of the fuel prices, straight manipulation, right? So now the Fed will be trying to take decisions based on these statistics. So it's going to be interesting times. Let's see how it crumbles. I think the economy can take so much.
Well, one of the things I
Right.
noticed, there was two things that I saw this week in the news. There was one large US developer, and I think they've got like a 75% cancellation rate on all of their new developments. So that sort of housing market, the housing bubble's already started to pop in the US.
Yep.
In the UK, it's also started, I would say here in the UAE, it seems to be a bit more delayed. We've capitalized on a lot of the macro events that have gone on, but it's still going to come. Things don't, this feels too reminiscent of
Look at this.
2007.
Look at that number, negative 7.9% with energy. And look at the other numbers in the same area. And what do you see? The biggest difference that was made was because of fuel, right? So again, manipulation is going on over here.
And
So it's
that's the sell
clear.
down of US oil reserves.
Yeah, exactly. So we got that. What else do we have this week? Again, we had Philadelphia manufacturing index. This came in a little bit higher, actually, a little bit higher from the forecasted one. So not much. This is a little bit of a mixed result here. Unemployment claims came in lower. That means this number shouldn't be low, actually. In my opinion, this should be a little bit higher from the previous month or even the forecast. Because if the rate hikes are working, this number should be a little bit higher because employment will slow down. So the labor market still seems a little bit persistent. What else do we have? We have the retail sales with UK, and clearly you see a little bit of slowdown, right? Last month it was negative 0.5. This month a little bit slower as well. But if you look at the forecast, they were hoping the number came in a little bit higher, above negative, right? Home sales, existing home sales are still high. People are buying a lot of houses in US. So that's an interesting number to look at. I think that's it for this week. The last week, that's it. This week, let's look at what's interesting. This week, we have the PMI. This is Purchasing Managers Index. So the purchasing managers make a report on basically all the purchases that's happening, and they make an index number out of it, right? So the number is supposed to come pretty much the same, right? Almost the same. So stagnant. with in UK, and also the flash services 49.6, almost the same, so stagnant. With US as well, we see numbers around the same area. Let's look at the previous ones. So US PMI is supposed to come in a little bit higher. So we're seeing a lot of mixed statistics, a lot of mixed results. I think the most important fundamental of this week will be the GDP, advanced GDP, and this is supposed to come in lower, showing the recession. The economy is getting pushed into a recession, right? You see, the previous month was 3.2. So we again seeing a slowdown. So that's it. I think probably this might be important. Core PCE price index on Friday at 5:30 p.m. That's my time, 5:30. So that's also, we're seeing a mixed result, 0.3%, a little bit higher from the previous month. So I think mostly we're seeing a lot of stagnant numbers around the same range. Yeah. All right, Aaron, do you want to go through BTC and Ethereum before I go into the other pairs?
Yep. So just, I'll share my screen.
Just a quick question, bro. You know, like you're saying here, obviously GBP is stagnant and JPY in QE. Does that mean we're going to see a lot of sideways direction on GJ? Then that's obviously why it's been so choppy.
Yep, exactly. So both have the fundamentals have to be opposite, right? Inversely correlated.
Yeah.
So the issue is that both are kind of weak at the moment. That's why we're seeing this huge monthly consolidation. So that's the issue that's going on with GPP and JPY. And I've been personally avoiding it as well.
It's just made me, like, something's just clicked in my head there. It's just made me understand a lot. Like, obviously, why GJ's been so choppy and consolidating for so long. Like you say, I'm gonna avoid trading that at the minute because obviously the fundamentals. But it's just clicked for me. That nice for me.
All right, let's get into BTC. I'm finally getting over my heartbreak of losing my FTX charts, and I'm beginning to fill my charts under pressure by MM. So BTC's been on a bit of a mad one, following a lot of the Nasdaq still, a lot of relief in the markets. And I think if we were to kind of pull out to a higher time frame, you'll see that we've just had far too many red candles from the top, and this was a necessary short squeeze. And I think the trigger was those CPI releases and just people not really paying much attention. They saw relief, and people generally will trade the metric as opposed to the detail. That's one thing I've noticed over sort of my few years of trading, is that the metric matters more than anything. And where you sometimes get is a major pullback once people do start to understand, but it won't happen on sort of equity or security assets or speculative assets. You'll notice that more on sort of forex bound assets. So BTC is still, I would say, within a bearish structure on the monthly time frame, on the higher time frames. Nothing has changed there at all. We've had a recovery, and I would say, and I did mention the group as well, confirmation of the breakdowns that we've had that have been confirmed on lower time frames but have yet to be confirmed on the higher time frames. So you can see now we're confirming the breakout on this monthly time frame. If we go on the 3-month, you'll notice the same thing. Oh, zoom in. Sorry, is this 3-month or 3-minute? No, this is 1 hour. Sorry, I went to the wrong button. Why is the log button not working? Zoom. Yeah, so you can see that confirmation of that breakdown there. So everything's working in, I would say, still in bearish territory. It's just on the lower time frames where we're seeing a lot more bullish momentum. And as I said, that's been triggered by the CPI news. We've just had a significant bull flag into another bull flag. I did trade this movement here. It wasn't something I shared because I got stopped out, but I was looking to actually go short because none of this made sense. 21.5 is quite a high, strong resistance level as well. but after having four, you could call that a double top followed by another double top that did break down before following up to another bull flag. However, now we're forming a, I use trend patterns. doesn't use his breakouts, purely breakouts. So based on this, it looks like we're still going to be coming down after a recovery. So we should reset and then probably go back up again, fill some of the CME gaps that we found around 26K level, which are all the way down here. So targets, I would say, I'm looking to short off the 23.4K level on this, the 2 hour and the lower time frames. So if I'm looking at shorter time frames, I'm looking at just upwards bullish momentum, trade the trend. But still on the higher time frames, I've still got a lot of long-term shorts in play on Binance that are predicting more of a bearish outlay. So that's BTC. I actually haven't marked up a ETH chart, but mirroring BTC, everything's following. We're just seeing a flood of capital unnecessarily into the markets. Based off what MM's gone through on the CPI, people still have expendable income. We're still seeing earnings go up. So inflation is still very, very rampant. It is going to take a lot more movement. I did see another statement out of one of the Fed members that they need to continue with the rate hikes. So ETH is likely going to do the same thing. It's going to follow the same pattern. 1680 is the key level here to break. Upon breaking that, we should rise up to about 1.8 to 2K. Those are the key levels on Ethereum. So those are the key crypto assets. Now we'll go on to the forex.
All right, let's look into forex. Let's begin with GU. Actually, before looking at GU, let's look at the Dixie. So the DXY dollar index. What did we say last week? We said this area of support is extremely important, and what do we notice is still holding, right? It's a very important support, still holding. Because if this area support breaks, we might see a lot of bearish momentum with the dollar. Yeah. So again, you see how the weekly candle closed with the doji. That can probably be a sign of that maybe the dollar index wants to pull up, right? But the question now is, does the weekly and the daily time frame give us a break towards the upside? That would confirm our dollar strength bias. But for the while, I remain bearish because I can't let my own bias affect what the market sentiment is. Yeah. So at the moment, you clearly see how we have been on the sideways motion of this very important area of support. All right, so let's look at British pound from last week. This is the trade that I took. Let me delete this at 1.23. Let me delete this as well. So let's look at the monthly chart because we have a week left, pretty much. A little over a week left for the monthly candle to close. And what do we see? If you notice something interesting with my chart here, if you see the red line, that is the yearly trend line. And what do we see this week? It kind of rejected that area. So that's quite interesting to look at. The weekly chart, clearly bullish, yeah. And you see how it's broken the last structure point there. And that would be still a very important area for me. Let's look at the daily time frame. So the daily time frame was interesting. We see clear bullish momentum throughout the whole week, pretty much, right? From after Monday, we saw huge momentum. And now what do we see? We see a small doji candle, maybe showing that maybe the bullish momentum is slowing down. But another thing is that if you look at this candle here, the exhaustion wick, that shows us that there's a lot of bullish momentum in the market. So something I would keep an eye out on, maybe I wouldn't trade it as a confluence yet. So the most important thing for me would be a healthy pullback, right? A healthy pullback maybe to this weekly structure point here, right? Or even the structure point down here to the daily, right? So let me mark that area out. So this area here around, again, I think it'll be at 1.23. . . 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1.23. 1 And then we have an area here at 1.2250, a quarter point. Something I've been noticing with GU is I haven't been trading GU for a very long time. I just got into GU now, but it does respect the quarter points really, really well. Let's look at the 4-hour chart once. So clearly we do see a nice resistance forming here, yeah? So the question now is, does it pull back, or do we still see bullish momentum? Yeah. Clearly I would wait. One thing would be interesting was to wait for this structure to break on the H4 time frame, and then we can see a little bit of bearish pullback, right? So best thing now to do with GU is wait and take long positions at these areas that I've mentioned, yeah? Otherwise, no trade. Right? All right, so that's clear with GU. GU is quite simple, clean price action, nothing complicated here. Let's look at GJ. GJ has been complicated this week. Still, we did mark out an area here at 16500 last week, and we did get a nice move there. Me personally, I didn't take it. Why? Is because you see how price didn't come here and form resistance immediately. It actually pulled up all the way up here. So if I had to take position here, that would be 100 pip stop loss, which I usually never take. My stop losses are maximum around below 50 pips, right? So this was a nice position if you still took it, but it was very complicated to trade GJ last week. And I think that would be the case going forward as well. So let's look at the monthly time frame. Monthly time frame was very interesting, actually. Last week, what happened was price pulled up to the month. You see how the monthly structure broke? And the monthly structure point got retested last week. Let me show you the weekly time frame. You see how that monthly structure area has been holding as resistance, right? So that's an interesting point, maybe something you should mark out on your chart. Let me delete this. Okay. So looking at the weekly time frame, choppy movement, yeah. But we are bearish. So the best course of action here is to not take a trade yet. Maybe wait for this consolidation to break and wait for the structure point down here to break. Down here, yeah. Let me mark this out as well. There. Again, you see how clean structure is, like the quarter point. There. Look at the daily time frame. What do we see? Straight choppiness, yeah. What do we see? We see price kind of double bottom, took off, right? And even if you see it made double tops and then pull down, right? Again, we are seeing the resistance from here. So the best area, like to make this simple, is wait for consolidation to break. And I can highlight that out with this box. If you see this box area, this is no trade zone. Don't trade here. Wait for price to actually establish a nice trend. Personally, I'm bearish, so I'm going to just mark out this area here, would be easier. And another confluence to this area is, if you notice, the daily structure point also lies around here. So that's two confluences, nice strong confluences to take a short position at 156, 250. So that would be the scenario with the bearish thing. I wouldn't look to take bullish. Maybe you can short term take a long trade, obviously after this area here breaks. But this would be a risky position. Personally, I wouldn't take it because your trend is different. So this is the most important area I would be looking at, 156 to 50. Yep. So that's clear with GJ. Let's look at indices before we look into gold. So let's look at US 30. So US 30 clearly gave us a nice position last week at 33,700. You see how I haven't even marked out much. I just have 3 supply demand areas, and that's all you need to take a trade off. So what do we see with US 30? We see a nice bullish trend, and we see how that supply demand area that we marked out last week has respected, right? So we do see bullish momentum, but one thing I do not like is this formation of this candle at the moment, right? So that's not doesn't look good. Let me mark out the structure point here. Let's see. Yep. Okay, let's look at the weekly chart. So the weekly chart is clearly bullish now. What do we see? Price pulled in, nice support formed. Now the important thing would be for price to see if price breaks down here or it can continue the trend by breaking this area here. So I would personally take trades only after this monthly structure point breaks. It should be 34 around this area. Let's look at the daily time frame. So the daily time frame is interesting. I believe price might come, possibly retest this area here, and then maybe take down. So, or it can just pull up with this kind of momentum all the way and break these highs. So the main important thing here is if you notice the time frame correlation, the monthly time frame is bullish. The weekly also is bullish at the moment, but there's a possibility it can break down this level. So now, again, this is a no trade zone. Don't trade here. Yeah. Wait for price to break this area or break this area to form a nice trend. So monthly is bullish. Weekly is technically bullish, but in consolidation. Daily is bearish. So we see a lot of different trends in these three time frames. So at this moment in time, best to wait. So I would say let this area break and you can do something interesting here. You can take a trade of, let me mark this out. You can wait for this daily structure point to break and maybe maybe add a little bit of a position there and then maybe scale in if this area breaks. So low risk here, higher risk here. So let me mark that out. All right, so that's what I'm looking at with this. Let me look at this again once. So yeah, you see how the daily structure point that I've marked out here also is correlated with the weekly structure point. Right? So that's a nice strong area to take a position off from if it breaks. All right, so that's what I'll be waiting for with US 30. You can take a position, short position, but it would be high risk, right? Because if you are taking a short position, it would be around this area for this area to break. 33. All right, so that's what I'm looking with US 30. Let's look at S&P 500 SPX. SPX, I think it did not reach our area last week, so there was no trade to take. Why? What do we see with SPX? Clear consolidation, choppy movement, right? Nice consolidation on the monthly time frame. Let's look at let's mark out the monthly structure point. And let's look at the weekly. Okay, so if we got a base of our trades on the weekly and the daily, because the monthly at the moment needs to break this structure point, right? So if you look at the weekly time frame, we see a little choppy movement still. Why? If I had to draw trend lines, which I usually don't use, if you look at this, and if you look at here, what do you see? Price is now inside this range here. So it needs to break above or break below. Personally, I think it should break above here. And this is the position where I would maybe start taking long positions from. Let me mark it out.
Do you mind just going to a higher time frame and just seeing when this breaks bearish trend, what level?
So the bearish trend has to break at least with a monthly time frame, it has to break 38,400, 38,40. This area. Let's look at the weekly time frame. Again, it needs to, with the weekly time frame, it needs to break this area here, which is at again 38.40. So 38.40, it might be a very important area to look at with the S&P 500. Let's look at the daily time frame as well. Yep, with daily time frame as well, there's a lot of significance with this area here at 38. Let's call it 3800 to make it fair, rounded. Because if you notice again, that area has been holding as clear support. Yeah. So I think if you're going to take short positions, wait for this area to break at 38. Let me mark that out. Here. So this area needs to break for you to take short positions from, because the monthly, the weekly, and the daily will be correlated. That would be a high probability short position. Yeah. So these are the only 2 points I'll be looking at this week: the 4,080 and the 3,800 with S&P 500. Yeah. Okay, let's look at gold. Gold has been on a rampage the last literally from all the way from November. And what do we notice with gold? It's approaching, almost about to approach the all-time highs. Look at that movement. Huge bullish candles, yeah. And if you look at the weekly time frame, what do we see? Straight bullish momentum for the last, literally the last 1, 2, 3, 4, 5, last 5 weeks, and no pullbacks, which is not healthy for any price movement, right? We usually need to see pullbacks. What do we notice with this candle here? This weekly candle is a little bit similar to the GU candle. What do we see? We do see a lot of buying pressure, but we see the body is slowing down, the momentum is slowing down. So that's something interesting to keep an eye on. Let's look at the daily time frame. So the daily time frame has been interesting. I was actually planning this structure point got built only after the Monday candle close. So we were not able to catch this in the pre-weekly analysis, but there was a nice clean move that occurred with gold. If you were trading, looking at the structure points, you see how it broke through trade 1, and we also had a trade 2 retest. Yeah. So for this week, I think the best course of action would be to wait and see if it can again continue its bullish momentum. And that would be to wait for this structure point here to break.
When's the CPI meeting?
The Fed meeting is on Feb 2nd, I think. Yep. So this possibility, this next week, we might see consolidation till the Fed meeting comes through, or maybe the market might be pricing in the sentiment. So yeah, so this area here is important. Let me mark this out. Let's say 1930. 1930 isn't clear. Let's make it 1932. Yep, that's clear. So if this area here breaks, I think maybe you can get a long position off. Yeah. But something to keep an eye out on would be this weekly high, right? So sometimes price ends up rejecting and then pulling back. Yeah. So take a position here, and then maybe if you want, you can wait for the highs to break and then take another position there. But for now, 1932 seems like a clean area of structure. But when it comes to the weekly time frame, we haven't seen a pullback at all. You see how the weekly time frame, we see heavy bullish momentum. I will at least wait for this weekly structure point to retest at 1800, but that's a long way from there, right? Because if you look at the price, and if you notice the pips, that's like 1,200 something pips, a lot of pips, right? So that's not realistic. We can't wait for like a few weeks for a price to come there. Yeah. So maybe basing your trades off from the daily time frame would be smart for now. Yeah. Let's look once in the lower time frame. So price action is really clean here. You see how the structure point broke. You see how we have a retest. Now the question is, does price break this next structure point, or does it wants to pull back? So we're clearly bullish on gold. I don't think taking a short position would be safe. If you want to take short position, you can and ride out this momentum here with this area here. If this structure breaks. And that would be at 19. Let's call it 19. Oh, let's keep it at 1900 because 1900 is a very significant area. Yeah. You see how at 1900, if this area here breaks, clearly you can ride out that momentum, but you have to be extremely careful if you're taking short positions, because price can reverse immediately because the trend is bullish. Yeah. So that's it. It's very simple with gold as well. The price action is clear, but the question is, when does gold pull back all the way down here, or does gold keep on pulling up till we see 2K break and then eventually the all-time highs break? I personally think the all-time highs will break and we might enter a zone between 2,500. Yeah. So let's see what happens with gold, because gold does really well in times of stagflation. So that's why we've been seeing this heavy momentum. Once the Fed announced we are going to slow down the rate pace of hikes, to slow down the pace of hikes, we started seeing a lot of momentum. So that's what gold does during times of stagflation.
It's interesting because there seems to be a lot more correlation to date with gold and BTC than there is with the Nasdaq or the S&P with BTC, which we've seen in the past.
Exactly, you're right. That's something I've been noticing over the past year or even year and a half, the correlation with BTC and gold, because that's a good thing. If BTC actually starts following gold, that means people are looking at BTC as a safe haven. So we gotta wait and see what the sentiment is, what happens with the February meeting.
Is there a way to plot dollar against BTC?
BTC and USD, that's what you're saying?
No, as in USD BTC.
USD BTC should be there. Let's see.
No, it all seems to be
not really. I think you can do, I forgot there is an option to invert your charts, but I don't remember how to do that. But you can invert it.
It's in the bottom right corner, I think, where auto and log is. It's somewhere that it's around there.
Here.
Have a look on the settings.
Yeah, I think that's on the
invert
phone one.
scale. No, there's invert scale.
Yeah, invert scale. That's the one to invert your chart.
Where is it?
In the settings on the bottom right.
On the bottom right, settings. Where is the settings?
Yeah, go to the top. Maybe it's on the top on yours. That's set the pod. Oh no, it's different to mine.
Yeah, because
it's underneath 14,800. See, like above auto. Above auto, the little sun.
Oh, yeah, got it.
Yeah. Go on invert scale. Yeah.
Invert scale. Yeah, there you go.
So what you see here is against go year to date. Sorry, and then pull out, and then what you'll see is that against BTC, the dollar is just plummeting.
Yep.
If I got 2019, how can I go more? So maybe that's possibly why.
Possibly, yep. This is interesting to look at the inverted charts.
Then it's difficult to see because obviously we're at 20. Let me try a weekly. Maybe that will make it a little bit better. So we're actually approaching back to 2018 levels. If you think about it from that perspective. 2018 levels of BTC. So in terms of dollar power, we're sitting at that same level against BTC.
Mm-hmm. This is doing my head in.
This is a weird thing to look at, but this is the future. We'll be pricing things against BTC from now on. But if we invert this on a weekly time frame, I'm just looking here. It looks like we're possibly about to have a kind of crossover. Hang on, let me just double check something.
You want to share your chart?
Yeah, go on then.
Yep. The MA is inverted as well.
Okay, so if you look at this, it looks like we're moving towards like kind of a death cross. So from the golden cross here, we've had a lot of bullish momentum on the dollar, but now these are golden crossing. Sorry,
That's
death
interesting.
crossing. So it looks like we've hit a quite a high resistance level on that, and if you go up to a higher time frame, you can kind of see that resistance level there. So that resistance dates back to 2019 and then 2018. Actually,
Okay.
that is, yeah, sorry, that is the 2018, 2017, 2018 level. That's where we're facing that resistance.
Okay. So it's a yearly resistance,
It's a
which is a
yearly
big one.
resistance, yeah. Actually, no, it's a weekly resistance.
Okay.
Unless it's, let me just see what time frames it appears on. No, it is a yearly resistance.
It's the way to look at the chart. This means it's a fresh look on it.
Completely different dynamic. And this is the thing, is how you comprehend data.
I mean,
This,
when an artist paints a picture, like on a digital canvas, you tend to flip it on a horizontal, and your eye picks up little details when you flip the image. You know what I mean? So it's like the same thing with this.
yeah,
Interesting. Yep.
and like if you were to rotate a picture, you see something else. It reminds when I was when I did mushrooms and I went to the Van Gogh Museum in Amsterdam. Don't know how this story's gonna come up. And I was standing like I would say 15 meters back from one painting. Like I was far back. And I was staring at this painting, and it was a landscape. There was grass on it, but from that distance, it was just block colors. So the grass is green, the sky is blue. And then I found myself just taking steps forward over like a period of time. Obviously, my face is just melting right now. And it's just the closer you got, you started to see so much intricacy in the detail
Details,
that
yeah.
like, yeah, so like the grass
When
itself
you look
wasn't
at
just green, it was green, yellow, brown, 5, 6, 7 different shades of
when
all
you
of
look at a
those.
tree, yeah, when you look at a tree bark, it's like the detail in tree bark is amazing. When you know, it's crazy, isn't it? I'd love to look at art, mate. I've never done that. Like,
A lot of respect for that kind of detail. But this is the thing, like with charts as well, everyone has their own perspective. And that's why if you're trading, you need to really stick to your strategy and your edge, because as soon as you implement another edge without backtesting or anything, that's when you start to move away from your strategy. You start to get crowded judgment, your emotions start to come into effect. So it's good to talk about these things and get new perspectives, but don't trade based on them until you've actually back tested and seen what it does, because it could become another confluence for you, or it could just be spoof. It could be just a run of the luck.
that's oh yeah, definitely, man.
But this
I
shows
think
BTC as
I
a
think
store of value.
in my perspective, like if like for example, personally, if I'm a better seller than buyer in the market, because I'm easily able to see the selling patterns more than the buying patterns. So if I invert the chart when the market is bullish, that would help me actually identify the opportunities even better, right?
That's a very good point, actually. And I would
Yeah,
say I'm the same. Like it's much easier to make money in a bear market than a bull market, especially in the crypto side of things, because it's just so volatile, the level of capital that's gone in like previous bull markets. But it's easy to see volume tapering off, and whereas you don't really get to see that as much on a bull market.
Yeah, but exactly. Like head and shoulders, like looking at inverted head and shoulders is a little bit more difficult to recognize. And the actual head and shoulders is easier to recognize, right?
Yeah.
Simple things like that.
That's the thing. Like when
definitely.
I always like when I'm trying to find an inverted head and shoulders, I just see double tops.
Yeah.
Okay. Sorry, on Head and Shoulders, I see a double top. That's all of us, I think. Is that all of our charts?
Yeah, that's it. I think we're good. Yep.
Have you been trading USD while obviously there's not much going on the other pairs?
No, I'm planning to get into US30, not yet. For me,
Sorry.
but yeah, GU and gold is what I've been trading recently, but US30 I might get into it because the price action does seem really clean. But the issue is the spreads and stuff that I still need to figure out.
Yeah, I've been hesitant to trade gold. Obviously, I'm bullish on gold, so I don't want to take shorts. But I'm just waiting for that pullback that's not coming. But like I say, after watching the previous technicals there, like I'll be paying attention to those areas, like obviously long.
Yep, last week we had a nice clean opportunity with gold. If you were looking at the daily structure breaks.
It's just those gaps down below in the higher time frames. I've not seen that with gold. It looks like fucking a shit coin. Do you know what I mean? I've never seen gold move that way, so I'm just hesitant to take longs when it's due a retracement. But
I mean, if you look, because if you look towards the left, your left side, you'll see the same kind of movement when it was bearish. Yeah, so gold tends to do things like this. So we got to react and adapt with gold.
I need to backtest that. I need to backtest them big downwards moves. That's obviously backtest a big upward move as well.
Yep. Exactly.
Nice one.
All right then, Aaron, we're good with the recording.